Good morning, everybody. Hey, welcome to Thursday, almost the end of the week. Yesterday, we had a really roller coaster day. We started out down really bad, fell even further. The Dow came back from some 500-point loss to lose just a little bit yesterday. So ended up being not a bad day. So I'm sure Dave will want to discuss that here in just a little bit. Again, I want to remind you, folks, listen, if you are close to retirement, what is close? 5 to 10 years, or you're already retired, then we've got this must-have report on retirement strategies. You know, retirement is a one and done deal. You don't get any do-overs when it comes to retirement. So you want to get it right the first time. So text the word retirement to 863-285-3815 or click the link right here in this Facebook post. Hey, Dave will be with us in just a few moments.
105.7 Light FM. That's Imagine Dragons. Imagine a stable stock market. I know it's a pipe dream because right now we ain't very stable on Wall Street. Let's look for some stability. Always stable as a rock. Here's Phillip Statler down at Statler Financial Services in downtown Sebring, and a voice of calm in the wilderness. Phillip, how are you today?
Hey, I'm doing well, Dave, except for that little, hey, we got 9 seconds, let's go. That's like, I had to take a deep breath there.
Yeah, there are these days in which sometimes I look at the record while we're trying to find out what's important in a day, and oh, shucks, record's almost over. Boy, yesterday, I'd say it was a roller coaster, but it really wasn't. It was all uphill. Not very doggone often you have a 600-point swing on the Dow in the process of a day and end up pretty darn close to break even at the end of it, but it was steady all day. You and I were kind of trying to divine what it was that prompted the market to just steadily climb up through the day, and near as I can figure, it just everybody got bored with pessimism for a day.
Yeah, it looks like it. I don't know. I mean, we started out the morning. After it opened, we continued to fall and fall pretty fast there for a while. But come late morning, early afternoon, I'm not sure what happened, but I liked it. We saw the Dow start to go back the other direction and start to climb somewhat, and to end up down less than 30 points is a great day. And I think we can probably attribute that 30 points to Disney.
Yeah, because Disney had a really rocky day. The other two primary indexes that we track were up just marginally, but still up yesterday. And it was really rather interesting yesterday. We started out with virtually a disaster in the making, and then came back again for perspective stakes, though. We only closed at 26,007, and then what's that, 1,700 points below the record that we touched a week or so ago. So we've got some coming back to go and settling down with all the trade discussions, don't we?
Yeah, we really do. And so, I did see a thing there that, stocks have a further ways to go. In the downturn, they're really starting to say that, look, the investor right now is not real concerned. So until the investor gets concerned about the market and the downturns, we won't see this whole correction thing follow through.
And that's kind of, investors are not paying the attention that they conceivably could, but about the time you get the amateurs' attention and they start bailing out, that's when we start having, the really gyrations downward that stay down for a while. One of the tip sheet people I was reading on one of my news sources was saying that the coming correction could be, quote unquote, of layman-like proportions. And at that point in time, it kind of makes me, number one, sit up and take notice, and number two, mutter to myself, for heaven's sake, they have pills to correct that level of depression.
Yeah, I know. Hey, we got a slew of things coming out today, or that have come out today.
Let's hear some of the reports. Give us some good news.
So we've got Cardinal Health, the drug distributor. They beat by 18 cents a share. The revenue was also above forecast. They say they still have some work to do, but they are now positioning themselves for some really big growth in the healthcare. The healthcare industry is always changing, so they think they're able now to do a better job of keeping up with some of that change. They're up about 5.25% this morning. which is not bad for them.
I was going to say that's a company I'm not intimately familiar with, but I see them on my big winner list this morning so far.
Let's hit travel for a minute. We got 3 travel companies that reported. We got Norwegian Cruise Lines. They beat by 4 cents a share. Revenue beat the estimates also. Norwegian said they had a great quarter. Their demand they see going forward is still robust, but their full year guidance was slightly below the consensus estimates. They are seeing an impact because they can't sail to Cuba anymore, so they've had to cancel that Cuba, and so they're trading down about 3.5% this morning. We had the 2 main travel companies. We had Booking.com or Booking Holdings, which is the old Priceline.
That's the one I recognized on one of my lists, and there's a big change on that one that's even bigger than Norwegian Cruise Lines, except in the other direction.
Yeah, it is. They beat on earnings. They seem to beat on revenue. They really had a pretty good quarter. Summer stuff's really starting to kick off really well, and so Booking, which is the Priceline company, they're up about 2% this morning before the market opens. And then the loser for the travel company side is TripAdvisor. TripAdvisor missed by about 6 cents a share, and they're basically, I don't know, they just came in short across the board, and they adjusted their other earnings down for the rest of this year too. So even so, they're trading up almost 4% this morning. So somebody saw something good somewhere in the report that we didn't see.
That's one of those sites that I have trouble really understanding where the financial model is on that, because everywhere I go to a restaurant seems to be the review site of choice for the restaurateurs in the area. I go out to eat someplace, and if they know who I am or they ask for my email, within about 24 hours I get a request, hey, be sure to review us on TripAdvisor. So they evidently do well as far as reviews. They aren't, and they seem a little better regulated than Yelp is, so they seem to be the preferred review site for the restaurants in our area.
Yeah, they do. Hey, we do have a huge miss here, and this should show up as a big loser on your list if they follow them. That's Party City. There's no party going on at Party City right now.
What happened?
They missed by 14 cents a share on estimates. Revenue was also way off, and then to top it off, they've lowered their guidance for the full year, and they're blaming it on a helium shortage and higher freight costs. And so they're getting beat up pretty bad, down 11.25% this morning.
Ouch. They didn't make my list of selected stocks. I don't know how my winners and losers list gets selected, but my biggest loser that I got listed is one we talked about quickly as we went to the show here, Kraft. They're having trouble selling cheese and ketchup, aren't they?
Oh, they are, and they haven't reported yet. So they have delayed their 10Q filing, and so they were down about 7% earlier this morning, and supposedly they're going to book a $1.22 billion charge, and so that's what's really causing them some major issues this morning.
And when you're down nearly 8% and you haven't even reported yet, that's a lot of mustard.
It is. Hey, I got two winners for you here.
All right.
Roku came in, and they only lost 8 cents a quarter last quarter compared to the 22 cents they were expected to lose. Revenue beat, and so they added a 1.4 million new subscriber accounts. So they are up 17% this morning.
Wow. I got a couple of friends just signed up with them, and they like it a lot.
Yeah, really good. Really. We use it quite a bit. And then we have Lyft. Lyft, they're just hitting it out of the park. They were expected to lose like 68 cents a share. Mm-hmm. I'm sorry. That's what they lost. They lost 68 cents a share. They were expected to lose like $1.70 a share. So they really did well. 41% increase in ridership compared to last year, and they are up about 8% this morning.
Number two in the ride sharing business is doing well. It'll be interesting to see what Uber ends up reporting as later on.
Yeah, it will be. And then another big loser, Zillow.
Oh boy.
Yeah, I know you saw this one. They lost 14 cents a share, a penny less than what was expected. Their revenue was above, but they're under some pressure. One of their sectors, their premium agent business, is not doing well, and so they're down 14.5% this morning.
Oh boy, not a good start and that's also an indicator of home sales indications as well, isn't it?
It is, because that's kind of the professional realtor group, and so if that's starting to slide, then I think that's another indicator for the real estate marketplace.
Absolutely. Resetting the table for the morning. Yesterday, as we said, was a mixed day. NASDAQ and the Standard & Poor's Index both had some recovery. Dow got weighed down by Disney. They were off by 22 points. We started out the morning, the only government report out was unemployment claims, which was good. It was a little bit of a surprise, 209,000 claims. Better than expected. Rolling it all into a ball, Phillip, 40-odd minutes before we start trading. Where are we going today so far?
So right now, it looks like we're going to get a little bit of a bump at the open. The Dow is up 80 points, which is about 1/3%. Same with the S&P 500, up a little over 1/3%, $10.65. The NASDAQ's up 0.5%, $39.50. And then we've got gold and silver retreating somewhat. The gold is at $15.07 an ounce, down about 0.8 from where it closed yesterday. And then silver is down 1.5%. It had closed up over 17. It's down to 16.93 right now. And then we've got crude oil up 2.3% from where it closed yesterday at $52.25 a barrel.
I'm not sure that 52.25 isn't off a little bit from when we spoke yesterday morning, though.
I think it is. I think because it slid yesterday.
Yeah, morning over morning, I think it's an improvement. Overseas markets, by and large, the rest of the world evidently got sick of pessimism as well. Everything was in green ink when it closed around Asia. European markets also trading up this morning. And the 10-year Treasury notes, by and large, are recovering a little bit after dipping overnight. But still, interest rates are off by another basis point from the close yesterday evening, which is not what we wanted to see. Phillip, somebody need to get some advice as far as how to stabilize and make for a fruitful retirement. How do I find you on the phone?
And then give us a call at 382-0037 to schedule a financial X-ray analysis of the current portfolio and just to get a coach that will help you through retirement. And then we also still have our free report on retirement strategies. You know, retirement is one of those things that, you got to get it right the first time. And so you want to make sure you have the right strategies in place. Text the word retirement to 285-3815. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays and 10 a.m. Sunday mornings on News Talk 730 a.m.
And streaming all the time at newstalk730am.com as well. Phillip, thank you so much. We'll catch you tomorrow, all right?
All right, thanks, buddy. You have a great one.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Of all the questions.
Hey, folks, thanks for joining us today. If you like what we're doing, please share this video with your friends and family and like our page on Facebook, Statler Financial Services. Have a great one. I look forward to speaking to you tomorrow as we close out the week.